Hey everybody, this is just a quick video. Let me fix. It's not structured. There's no script. I'm just freestyling. Hey everybody, this is just a quick video, just to kind of update everybody on what we're going to do with this group. It's been many years, and I started this just trying to help people buy crypto. That's what it was in the beginning. Just help you help yourself, basically. And there was a time when the bull market was going, and everybody was making money, and people were buying, and then we hit our first, bear market, and things crashed. The entire group pretty much went crickets. Nobody was saying anything. And I keep chattering over the years, trying to do something with this, trying to figure out a way to monetize this because, you got to make money. Everybody's got to make money. And I like sharing information and sharing what I know, what I find, and what's working for me because it could help somebody. That's really the base point. We all want to make money and it's fun. So over the past few years, we've tried this, we tried that. It becomes kind of complicated when you're talking about crypto because of the nature of the beast, the uncertainty and the regulations. So it's not so simple. And I usually don't want to be responsible for people's money. You could give me money and I'll buy your tokens, whatever. I might do that for family, but I really never wanted to do it for anybody else. So what we were about to do with the Yield Hunter was train people on how to get into the DeFi space. And DeFi is just a catch-all for, it's not a centralized area. This is outside the banking system, outside the machine, outside the government, everybody. This is a way to do it yourself. And we did this about 4 years ago, and we were making money, and we got wrecked because we got a little greedy. We were just running fast and furious. So we've done a 180, and now what's going to happen here is I'm weighing two possibilities. I think everybody should understand what it is they're doing, or what, if I take over what I'm doing. You don't just want to blindly throw your money at somebody and say, make me some money. You kind of want to understand how it works. And the way this whole thing works is just like a stockbroker. In reality, people are trading nonstop, whether you like it or not. They're trading constantly, whether the market's going up or down. Somebody's buying, somebody's selling, somebody's getting wrecked, somebody's making money. It doesn't matter. Every time there's a trade, millions of times now, whatever it is, there are small fees involved. Doesn't matter what blockchain they're on. It's just the way it works. Every time you trade a stock, the broker wants you to trade. They don't care if you lose money or they don't care anything. They just want you to trade. That's their that's their way they make money. The way they pay their bills. You trade, they make money, unless they're a fiduciary. Then they have an interest in what happens to you. So liquidity pools and yield farms are just two methods to become the bank, to become the casino. You're basically providing liquidity, meaning you're putting your funds in there into whatever token pool there is. And I'll use a very simple one, blue chips. The way we would do it, and the way it's the smartest, is to use a staple. They're usually pairs, okay? So they're paired together, and then people put money in there, and then they trade. It's a little more complicated than that, but we'll keep it simple. The safest way to do it is to have a stable token that's tied to the US dollar, USDC, USDT, Tether, whatever you do. Keep one stable token and then one a blue chip, Ethereum, Bitcoin, things like that. Yes, they do fluctuate. Yes, they swing wildly, but they are the most safest in the entire space. You don't want to put a meme token with a stable token because the meme token is just going to be doing this and could just bottom out and your money will just evaporate, literally. And you don't lose until you withdraw, but when you withdraw, that's called impermanent loss. That means it's not permanent until you pull out. Now it's permanent. So that's really what that is. So you hedge your bets, you choose a blue chip, pair it with a stable token, and then the name of the game is to just dump as much money as fast as you can. That's it. You pick a good pool. I have rules. I have a threshold of how much should be in there. If it's this much, you go where the money is. That's basically it. You go where the money is. I've got a floor level of what I'm even willing to do. The APY is going to swing all over the place. So that's kind of a factor, but it's not the biggest factor. And then the fees. How much fees is it paying? You want to go where the money is. That's where people are trading. You want to be there with your net. And you can cast it narrow and get big returns, or you can cast it wide and get smaller returns, but for longer. It's kind of like the fish are jumping into your net. If you go narrow, you might just get a ton of them jumping in quick, but then the pool will move and you're still stuck in that same position and the fish have gone over there. Now you're getting nothing. That's literally what it is. If you cast a wide net, it might do well for a minute, but then it kind of slows down. You're still getting some, but a lot less. But they're still out there for longer. You're still catching fish day after day after day after day. You don't sit there, stare at it, and move your net, because every time you move your net, you could be losing value. So that's kind of the way it works. And then here's another analogy. The whole purpose of this is like if you have two friends that have a rental home, in a nice hot area, identical in value, guy A, guy B, they both know that they're going to appreciate. They know the level is going to go up. They're going to be, they're going to appreciate down the road, but they also know the market could be kind of bumpy along the way. Well, while they're sitting there looking at their pretty beach houses or whatever it is, guy B says, you know what, I'm going to rent it. I'm going to put it up on Airbnb, whatever. I'll do it private. And he rents it out 20, 25 days a month, $200, $300, $400 a night, whatever. Guy A says, nah, I don't want to mess with that because people might mess up my property, whatever. And it's going to appreciate. Yet, he's just sitting there kind of riding the waves. This guy over here is riding the waves, but he's also pocketing cash every single day. Every day, $300, $400, constantly. It comes. He can use that money for whatever he wants to. He can put a down payment on another home. That's what this is. That's all this is. If you have tokens, cash that's sitting there, or not cash, you have tokens, they're going to be going up and down in value no matter what. And you're just praying they go through the roof and keep going, but that's never going to happen. It just doesn't happen. You would have to time the market, which is a losing proposition. So the smartest way to put your stuff to work, like I'm always saying, I don't know if anybody's listening, put it to work means you take your coins, you can either directly deposit them in there and go like that. You could loan against them, put that money in the pools and use that so that your original tokens aren't even getting touched. They're just sitting there. Or you could put stable tokens. You could loan stable tokens, and get a return, loan yourself money against that, put that money in the pools, and get massive returns. Like low in this space is 50 to 100% APY. Like if you're getting, it's nice, and you can't get that anywhere else. But in this world, that's bad. Like you're not getting that much. So hovering around the 50 to 100% returns, that's great. But you have to load the amount up. You have $100,000, $200,000 in there, you're fine. You have $50,000 in there, you're going to be making a lot of cash per day. If you have $1,000 in there, you're going to make tens of dollars. That's just the way it is. You can have a huge APY, but you can be making maybe $10 a day, maybe if you're lucky. So the name of the game is to just get as much cash in there as possible. If you come to the table with a lot of money, you're good. You just pick a nice pool, set it, go. And harvest the money, because you do have to harvest the money out and either recompound it, buy tokens, buy a car, whatever you want to do. If you don't have a lot of money to start with, you need to get as much as you can, because then your entire point is just going to be throwing money into it as fast as possible. That's just the name of the game. I mean, it takes money to make money. But this is a very simple, straightforward way to make ridiculous returns. And there are ways to play this. You could loan yourself cash and live on the loans like billionaires do, pay the loans back. You could use the pools to do this loop where you live off the loans, pay it back with the pools. There's no tax implications on that. You don't get tax on loans you make to yourself. That's an entire other thing that, that's on the back end of this, because everybody wants to know about taxes. Well, there's ways to avoid taxes. You just look at what the billionaires do and just do it on a smaller scale. Do the same thing. You have a computer. You can do anything that they do. You can set up any kind of trust. You can set up anything that they can for a lot less. But that's on the back end. So what direction? I was working with a bunch of AIs saying, okay, here's option A, here's option B. What do you think? Well, of course, it comes through with a hybrid. It's saying, okay, well, maybe we'll just set up not a school, but it's a training ground. There is a price to get in. And then there is not a lot of videos, not a ton of videos that are confusing. It'll be a small amount of videos that basically explain what it is, how you deploy, how you get out, just the basics, how you get in and withdraw your money, all the stuff, how you move around in the DeFi space. From that point, you can take the information and go do it yourself if you want to. Or you can get invited into a basically private investment group or club or a tribe, so to speak, where I'm checking on this because this is another platform where an LLC is formed. Let's say there's 10 people that want to do it, but you're going to have to come to the table with cash, or we'll all agree to invest amount per month until it reaches however much, but the entire time deploying into the pools. So that option will be a legal LLC created with everybody's multi-member LLC. It'll have its own bank account. It'll have legal advice, everything. The platform that it's one I've invested in is meant for real estate, for groups to invest in real estate or projects. I've always asked them, how can you do it for crypto? Well, it's very complicated to do crypto trading, but liquidity pools are different. And now they have a new system called a special purpose vehicle, or a fund of funds, a fund that invests in funds. This is the future. The special purpose vehicle is perfect for liquidity pools. So I'm talking back and forth with them, kind of hammering out the kinks, because I've already had an account with them for 5-6 years, and I'm just reactivating it and kind of structuring it under this. So we'll leave it open to the people in the group, but I'm going to need to go after bigger capital. So it is what it is, because I'll get paid based off performance, things like that. That's a no-brainer. These things make money no matter what. We just need to load it up with as much money as possible. That's it. So that's the approach I'm going to take. We'll have just kind of a funnel that goes in. It'll train you on how this works. You can take that information and you can go do it yourself. I'm not going to make a ton of videos. We're not going to have weekly meetings and communities and all that kind of stuff. That's a cohort, and I don't really want to, because I've got 2 or 3 other projects I'm working on. A lot of people just want me to, they just want to throw money and say, hey, do it for me. Well, okay, here we go. I've got a perfect vehicle to make ridiculous returns. It's the safest in the space with blue chips. And every time the market dips, I'll be extracting cash and loading up on Ethereum or Bitcoin or XRP, whatever. It'll have its own treasury of tokens that we load up on every single time the market dips, because we're going to be pulling money out. Maybe 50% goes back into the pool to hyper compound, and 50% goes and grabs some Bitcoin. Just keeps on grabbing, keeps going grabbing. Which Bitcoin goes up 40% per year, no matter what. So this is win-win-win all the way around. So anyway, this is what I'm thinking. I'm working with my AI to kind of hammer out the kinks. I'm talking to the platform, make sure that works. If it does work, then this will come together really fast. I could build the funnel in a day. We can get this stuff done in a couple days, and it's good to go. Now, the videos will take longer, but I work pretty fast. So anyway, just to update on how this is working. I know I'm kind of rambling because I don't quite know the shape this is going. The entire brand, that's easy. I just had ChatGPT. I said, look, take billions, Axe Capital, Bobby Axelrod, and turn it into a fintech type look. So it tried its best. I ended up overruling it and made it myself. So that's where you have the Axis Axis Digital Capital. Axis is the center. Digital capital is everything we're about to be involved in. So there we go. I hope everybody sticks around. I'll be putting out more videos in the next couple of days as it kind of solidifies, and we'll see how it works. Thanks for sticking around.